Hey guys, Omar Khan here from Theta Trading, and today we got a pretty exciting subject. What do I do when the market's at an all-time high? I get this question a lot. Stock market's at an all-time high. Should I put more money in? Should I wait for a pullback? Now, human nature, human psychology is such that you want to wait for a pullback. You're like the market's, it's rallied like for example, this April, the market has been up huge. It's been double digits. But March and February weren't the best months. Now we're an all-time high, and considering everything that's going on right now, there's a war in the Middle East, there's a war between Russia and the Ukraine, oil prices are an all-time high. Market couldn't possibly go any higher, could it? Well, let's take a look at actual evidence and see what history teaches us, okay? Because part of investing is psychology. You have to look at history. You have to go against what you think and understand what history tells you. Because I know the same thing. Oh, market possibly couldn't go any higher, can't go any higher. But let's take a look. So I'm going to share my screen here, guys, and let's take a look at how the markets do when we're an all-time high. So this is a study from Harvard Funds out of the United States, and it goes from 1926 to 2024, actually the beginning of 2025. So it's almost 100 years of worth of data, okay? Now, the markets are actually at an all-time high more often than you think. Out of the 1,188 months since January of 26, the market was at an all-time high, 363 of them. So about a third of the time, we're at an all-time high. And the reason is because the markets go up over time, okay? And on average, 12 months returns following an all-time high being hit have been better than other times, okay? Now, this is a study of the S&P 500. Okay. 10.4% compared to 8.8% when the market isn't at a high. Now it's just 12 months afterwards. So what does that tell you? That tells you the stock market has much more room to run. Just because it's an all-time high doesn't mean it's going to stay there and not move or it's going to pull back. It might pull back. You never know. But we have to look at what history teaches, what the odds tell us. The odds tell us that we are probably headed for more all-time highs. As you can see, 31% of the time we hit an all-time high. So on the S&P right now and the Nasdaq, we are at all-time highs. So let's just delve into the details a bit more. So 12-month returns, okay, higher after all-time highs. So 12 months later, we're at 10.4% compared to 8.8% for all other times when we're not at all-time highs. Now, 2 years out, 24 months, it's pretty much neck and neck. In fact, you're a little bit better off when it's not an all-time high. 8% versus 8.1. Now, 3 years out, 7.5 and 7.5. Okay? But this simply tells you one thing. At least for the next 12 months, odds are heavily in your favor. And the odds are pretty good for the next 2 and 3 years. So the markets probably will continue to go higher and higher and higher. Okay? Now, the key is the bottom line is as difficult as it is, it's almost impossible to time the markets. Now, that's why here at Theta, we use puts and calls, selling of puts and calls. And if you want to learn more about that, please reach out to us in the comment section below. We sell puts and calls so that we can buy stocks cheaper, so that we can get rid of our stocks at prices that we like and get paid for both of those things. Okay. Now, the difference is going back to this is compounding over time. Okay. Selling stocks at an all-time high can potentially destroy long-term wealth. Now, again, this is going back to 1926, so it's a very, very long study. If you look at $100 invested, okay, just invested all the way through it, you ignored everything, all the wars, all the chaos, all the inflation, everything, you just ignored everything. Your 100,000 would be 103,294 by the end of 2024. Now, if you switch to cash, in the previous month, when the stock market was an all-time high, look how poor the return is. $100 simply only grew to $9,922. That's it. $9,922. So what does that tell you? That tells you when the market's at an all-time high, the trend is your friend, as the saying goes. You might be better off just staying invested. Now, if you've got a chunk of cash, and I get this question a lot, hey, I've got a big chunk of cash. What should I do? I said, look, I can't tell you what to do. That's your decision entirely. But let's take a look at history. And history clearly tells us the markets are probably going to go higher from here. Right? Now, you could have a pullback, no doubt about it, but probably not. Now, just like I said, $100 investment in the US stock market in January of 1926 would have been 103,294. at the end of 2024 in inflation adjusted terms, a growth of 7.3% a year. It's a big difference. Okay. So, selling during shorter term time horizons can erode wealth. Okay. So again, we don't want to get in the habit of time markets. We want to use puts and calls to time the market. Sell a put. If you have a stock that you like, you like the stock, you think it's going to head a lot higher from here. Instead of selling it, why don't you look into selling a put on it? Agree to buy it at a lower price, get paid a lot of money for it, and the worst thing that'll happen to you is that you're going to own that stock at a cheaper price. That's the worst thing that's happened. But either way, you're going to collect a really nice premium. Now, if you want to learn more about what puts and calls are, I have some videos coming up. Plus, we have some in our archive library. Take a look. What are puts? How do I use them? How do I use them to my benefit to buy my favorite companies at a lower price? How does a covered call work? I've done some live trading demonstrations. Let's take a look, okay? Now, the growth of $100 invested X number of years ago, 10 years ago, 20 years ago, 30 years ago, etc., okay? Invested throughout. That's where we want to be, okay? We simply want to, again, use puts and calls to enhance our returns and lower our risk, okay? Now, if we had just switched to cash, oh, market's at an all-time high, let me get to cash. Market's at an all-time high, I don't want to invest. Well, look at that. It's huge. Right? At the end of the day, again, it's almost 100 years, but you've destroyed 90% of the wealth that you could have had you just stayed invested the whole time. Now, it's also a lot more difficult when you're moving money in and out, in and out, in and out. It becomes problematic. There could be possible tax consequences. Staying invested throughout, we think our strategy is the best strategy out there for someone who wants to be able to invest the markets in high quality companies and sell puts and calls to enhance returns and lower risk. It doesn't take a lot of time. So if you have a job, you have a busy family life, a full-time business, you can implement this and put it in your schedule. It might take you 15 to 30 minutes a day once you're pretty good at it. Now you kind of got to know what's going on in the markets. You also have to invest in high quality companies. That goes without saying. No good investor is going to be a good investor unless they're investing in high quality companies. But you can sell calls and puts on your portfolio, generate monthly income, agree to buy the stocks that you want to buy for a cheaper price, 15 to 30 minutes a day, anywhere in the world on your phone. That's a really good spot to have, but it starts with knowledge. You got to understand what you're doing and how to do it, okay? Now, conclusion, it's pretty simple. Don't fret over all-time highs. That's it. That's the bottom line. Just because the market's at an all-time high doesn't mean it's not going to go higher. It's normal to feel nervous about investing when the stock market is an all-time high. And trust me, I get this all the time. People get so nervous when the market goes to an all-time high. Oh, I don't want to put more money in the market right now. I think a dip's going to happen, especially right now with all this war situation going on in the Middle East and in the Ukraine. People are like, oh, gas prices are high. The market has to pull back. It has to. Let me wait a month or two or three until we get that pullback, and then I'll put it in. Well, that may happen. It may, but more than likely, it will not happen. The market will keep moving forward. Now, a lot of people said that in in February and March. February and March, we had a decent pullback, about 10%. But people are like, oh no, it's going to go even lower. And since then, it's gone substantially higher. It hits an all-time high. That's why timing the market is almost impossible. Now, going back to history suggests that giving into that feeling could be very damaging for your wealth. There may be valid reasons for you to dislike stocks, but the market being at an all-time high shouldn't be one of them. And that's the bottom line, guys. We want to make sure you guys are successful investors, and we wanted to just go over some historical data saying and showing you what it's like to invest when the market's at all-time high. I hope you take this and incorporate it into your investing strategy. Good luck out there, and we'll talk to you soon.